Hi, everyone. Thank you for that wonderful introduction, Bree. Really appreciate it. So I'm not going to introduce myself because, well, I've been introduced. So we're here to learn a little bit more about underwriting and risk, what our mindset is, and we know what your mindset is. We want to sell, we want to get accounts approved, we want them processing, we want residuals, and uh, we all want, I think, quality accounts that are going to stick around for a bit. So, and not really get into trouble with risk. So we're gonna explore these different areas today. Um, so Oh, hold on. There we go. Right screen. So I'll be discussing why our procedures are important in the underwriting world. I'm going to be discussing the documentation that you can include in your submissions to help with our review and to get the accounts approved faster. I'll be discussing and the unqualified list that we have. We'll be touching on how to identify fraud accounts from the ground floor. For risk, I'll be talking about how risk is assessed and why it's important. I'll be discussing what the types of risk, the importance of knowing your customer, and risk mitigation through our risk management reviews. So first of all, our philosophy is to approve quality merchants to accept credit cards as quickly as possible. With Sigma, we can be up and running the same day the account is approved. It's pretty wild how fast we can get an account underwritten, approved, and boarded in the Sigma world. As long as they have virtual equipment, or if you guys have the equipment, you're supplying it to the merchant, they can be up and running in as little as, I think, 6 hours. I think that's the number. Um, but before we do all that, we have to verify the business and the signer. It's really important because those are the bank requirements, and it helps mitigate our losses. We do that through online searches, and reviewing all of the documentation that gets sent in and reviewing the credit report. You can help us too if you receive an online or a phone lead. Just do a cursory search just to make sure the business is real, the person's associated with the business. We're not asking you to underwrite the deals completely, just have some kind of a vetting process for deals that you don't normally get um, from online or over the phone. Of course, if you're walking into the business and the person's physically signing with you, it's not necessary. We've been seeing such a jump in fraud apps lately. Um, Personal credit impacts approval to an extent. It allows us to assess the merchant's financial character and their willingness or unwillingness to pay debt. We don't want to be another unpaid debt from them. So that's why the FICO is very important. And also newer this year, in the last 8 months, I believe it is, we've worked with Experian and worked it out where our credit reports don't cause a decrease in the score. A lot of people are really concerned about that. Our credit pulls shouldn't be causing any kind of decrease in the score nowadays. Um, our goal is to reduce the amount of back and forth regarding documentation. That allows us to approve quicker, allows us to get the accounts up and running faster, happier merchants, happier partners, happier Mike Nardi. We do our best to approach to research on our end and ask for all documentation upfront. So you only need to go to the merchant once. Sometimes additional information is needed even after we receive the initial documentation because more questions may arise. It may sound like a lot of paperwork sometimes, but we really need it. We don't ask it just for our well-being because we know it frustrates a lot of people, and we prefer to do things with as little documentation as possible. We want the accounts approved just as quickly as you do. So we do have an unacceptable merchant list. You can find it on the ISO interface under the documents. There's two unacceptable merchant lists. There's one for Sigma and one for Fiserv. Um, there's no debate about these unqualified businesses, as policy is set by the banks. The banks have taken massive losses in some industries, such as timeshare resellers and loan modification companies, and others are against Visa and MasterCard regulations, such as specific adult services and online nicotine products. It's one of the questions I get all the time is, can we do online vape stores? We can't do online vape. There's no, in this landscape between Fiserv, and Sigma. Online nicotine is strictly unqualified. That's any product like cigars, cigarettes. I mean, that's what everyone thinks about, but vapes right up there. The good news is that some of those business we've been unable to write, we can now do so through Sigma. We've been boarding all of your CBD shops, adult stores, online, and moto firearms retailers, and a lot of smoke shops without issues. We don't need the extra letter that we've been asking for on the Fiserv side when you guys board it with Clover. Um, I recommend trying to move those merchants from Clover to Exatouch, so that way we get more of that stuff on the Sigma platform, and there's less friction there. So our first step is to verify a business in the underwriting world. And to do that, we have to follow our guidelines. We look for a completed MPA, including the tax ID, the correct business owner information, ownership equity. It's got to be at least 50%. It can be split up, or have a corporate resolution designate an authorized signer to be used. We need an accurate annual volume, excuse me, proper swipe and key estimates and site survey information. Beneficial ownership addendum is required for anyone owning 25% or more of the business that's not listed on the MPA. We also need a signed confirmation page. Please make sure you're double checking that confirmation page and it's the proper one for the Fiserv app or for the Sigma app. I recommend just doing it through ISO 360. If you're able to, it's a lot simpler. Plus, we get both apps come in, so we can pick and choose, and everything is there. It's really easy. We also need a TSF. If it's going on Sigma, the TSF is needed for file build, but it's not needed to get the MID up and running, because we don't have different front ends that don't work with, or different back ends on Sigma. It's just Sigma. We need documents to confirm business at the location, such as utility bill, a lease agreement, pictures, corporation paperwork, etc. Those are all important to submit with the deal. You could submit over a business license or permit, could be a tax certificate, a health inspection, or a liquor license, or anything else the merchant has. All of this places the business at the location, which is really important if it's a brick and mortar. Um, the previous processing and bank statements are really helpful, as they're able to confirm the business at the address as well. We're able to assess the risk better when we get processing or bank statements. We're able to know that the volumes are correct. And we have a website that's used for marketing purposes. That helps. And of course, if it's an e-commerce only merchant, it's required, along with the terms and conditions, privacy, refund, and shipping policies. And while it's not required, it's strongly recommended the merchant implements a CAPTCHA or reCAPTCHA, along with adjusting the velocity filters prior to going live. I mean, I can't tell you how often we see merchants getting dinged with auth testing, which is not a victimless crime. We all know that each authorization, as it hits the network, it costs, 1 penny, 5 pennies, 10 pennies, however many pennies that is set on the account. But it dings the merchant if they are a traditional pricing structure merchant. If it's a reverse cash discount or surcharge, that's dinging the residual, or it's coming out of the residual because it's the merchant's not covering that, because those sales are not actually going through. So I strongly recommend that the merchants' websites are up to snuff before they go live. We do see a lot of the foreign card attempts coming through, and it's really frustrating for all of our partners and merchants alike. And we need to make sure the volumes and keyed percentages make sense for the industry. Usually we have an idea on high tickets and volumes for different industries. For example, auto body, we know the run-of-the-mill auto body sale is going to be somewhere in the $5,000 to $10,000 range, and sometimes we'll see a $15,000 sale. So a high ticket of 5,000 won't make any sense for the business, usually. Just make sure you talk openly with these merchants so they don't get stopped by those boring risk guys. Um, We ask for all these documents because we can't find them or we're unable to verify the business using our resources, and we're required to have documentation on file for each merchant we board. The more you're able to submit on the front end, the better we can do our job. So next step is verifying the signer. So how do we do that? Have the merchant sign the PG, the MPA, and the confirmation page. This provides us permission to pull credit and match and shows us the merchant is willing to guarantee the account. Send in a driver's license if you can at any chance you can get that driver's license. It helps us validate signatures and confirms the home address. We appreciate everyone that sends in one, as we've caught a ton of bogus accounts just by looking at the driver's license. This is one of the most common things people fake, and usually the quality is very poor. They're not very successful doing it. Don't tell them that, of course. Just just try and get a copy of driver's license. And always provide the merchant's social. It enables us to locate a credit report, verify previous employment, and verify a merchant's identity. As stated before, it allows us to assess the financial character of the signer, because poor credit may require additional documentation. If we see missed payments on credit cards, mortgages, liens, etc., we feel as if they may not take any fees or debt payments seriously from us. We're able to check to see if there's an ID alert. With all the breaches that have continued to happen, these have become more commonplace. If there's a phone number on the ID alert, we must speak to the principal. If there's no phone number, we send a letter to the most recent address on file. We do try and work as best as possible by contacting the merchant, maybe at the contact number listed on the merchant processing agreement, or the business phone number, maybe a phone number we find online. And we'll run through an ID alert checklist with the merchant, ask questions to verify the identity that way. If all else fails, then we send the letter to the most recent address on file. Um, the next is we would need to review the recent inquiries and previous employment on their credit. It helps us identify a fraud application. Many inquiries and a different place or industry of employment, those are red flags. And we've seen a few deals come in without a social security number for one reason or another. And most of the time we can get it using other information provided from the owner, but it's optimal to have it for each deal. We are required to search match, to see if a merchant is on TMF or to see how many inquiries there are. That social security number helps us do that. Bad actors who've committed fraud or poorly run businesses who have received excessive chargebacks end up on this list. And also, we need to search OFAC. OFAC stands for Office of Foreign Asset Control. This involves sanctions against certain individuals, companies, and countries. It's against federal law for us to conduct business with a person or entity that conducts business with or in a certain country, such as the Balkans, Belarus, Burma, Ivory Coast, Cuba, Democratic Republic of Congo, Iran, Iraq, Liberia, North Korea, Sudan, Syria, and Zimbabwe. So how do we identify a fraud account? The following are signs that a deal may not be legitimate. The clients find you online. Most fraud accounts start as online web leads. Um, Please make us aware if you have any concerns about the source of the deal. So that means if you are typically receiving deals from referral sources that you know, or deals that you are walking into the business and you're getting them to sign the paperwork, you're getting in front of the owners of the business or what have you, and that's normal for you, don't take an online web lead. Chances are they didn't find you online. Chances are they are 100% fraud and they're just looking to get an account approved ASAP. Um, Second is that documents appear forged or invalid, and we see a lot of documentation every day, and we've come across many fakes. Like I said earlier, the driver's license is the easiest to spot, but we've seen voided checks, bank statements, process statements, business licenses, etc. All of them have been forged at one point or another. Occasionally, we have signatures that won't match with other documentation that's submitted. And this isn't as common, but we've seen differences that give us pause and makes us take a step back and review everything again. And finally, the customer's in a rush. They don't care about your rates. If the customer is pushing very hard to get a deal done and says yes to everything, and including higher rates and requests a rush on the equipment or only cares about going live on a gateway, that is usually a concern. So we also have card not present versus card present merchants. Merchants that operate in the CNP space tend to have higher rates of fraud because it's easier to use fake card numbers and go undetected. It's very important we work together to verify merchants that operate in a CNP space. Get as much information as possible. It will be easier for us to approve it or identify if something is off with the submission. Card present merchants are usually legitimate businesses, and we can find a lot of information online. We may request additional information to cross-reference our findings. And the best information to verify the business is pictures of the signage, stock, or lease. Home-based business are inherently higher risk. If the merchant is a home-based business, a lot of times the information is not available online. The bad actor may be hoping for a quick approval. Many times, the businesses that turn out to be fraudulent are contractors. This is why we ask for statements and some marketing. We're always a little more leery about the special trade merchants. You've probably seen us ask for more documentation upfront on those. This is why, because that space is littered with fraud. And why do we ask for all this stuff? It's because we have to follow guidelines set forth by the acquiring bank and to uphold the integrity of the payments process. And the more documentation we receive, the better. It allows us to detect inconsistencies and prevent fraud from happening. If we do find the inconsistencies or the merchant has poor credit, we may ask for additional information. In addition to following the guidelines, we need to safeguard EPI from fraud and prevent us from being put in an undesirable position. And every merchant account that comes in, we must assess the risk on, which is why filling out page 2 with the expected delivery timeframe and deposit percentage is so important. Bottom line is, we want to know your customer. Our partners are the first line of defense. You're the most important piece of the puzzle. You may see paperwork or have interactions with merchants that could raise some red flags. Please let us know. If you know your customer or the deal was through a good referral source, it lessens the likelihood of fraud. Let us know your background with the merchant, whether it's a family member, a friend, or he's been your customer for 10 years and you're switching him to EPI because we have the best teams in the business. It really helps us in the process. And by contrast, if something doesn't feel right about a deal, please share your thoughts with us so that we can take a closer look at it. If something seems suspect, let us know. It may end up being best to walk away from a deal sometimes. Just keep in mind, we don't know your customer. We still may ask for additional documentation if we feel we need it or it's required by the bank. Red flags. There's a lot of red flags for fraud that you need to be aware of. One, internet leads. Not meeting your customer, or if the customer finds you out of the blue, that's a red flag. Meeting or talking to someone over the phone gives you a better understanding of the applicant's intentions. However, we have had merchants that have come to or have accounts that have come to us from over the phone leads, and they claim they're a referral from John or Joe or generic name, and they do get through and they come to us, and then we end up declining it because it's ends up being fraud. Just keep that in mind. Make sure that referral source is cross-referenced. Maybe contact that referral and just say, "Hey, thank you so much for the referral. Appreciate you giving me, Joe's lunchbox." And maybe John would say, "No, I don't know who you're talking about. I don't know what Joe's lunchbox is." So vet the referral. Make sure the customer is providing you the proper information. If it's not your bread and butter, I don't recommend submitting these kinds of deals to us. And addresses, if the local address doesn't make sense to you, let us know. It's likely it's a questionable deal. The MPA information with email addresses typically associated with fraud accounts are older ones that are easy to obtain, such as AOL.com, Hotmail.com, Live.com, Yahoo.com. I myself have a Yahoo.com email address as my personal one. I'm holding on to it. and I do use it to register for things, so I get it. But most new businesses, younger people, they won't have these email addresses. It doesn't mean the deal's fraud, but using the information coupled with other factors, it may lead us in that direction. Signed volumes, as stated before, if they don't make sense with the industry, it should be questioned. Um, DBAs, we have a lot of construction and home-based businesses using the signers' names that are legitimate, but this is a factor we do need to consider. And unusual business or legal names, repetitive words, combination of letters and numbers, or signer's name being used, or a completely different name being used in the DBA. So, for example, you have a signer, his name is Joe Smith, for a business called Steve's Plumbing. It doesn't really make sense. And lastly, forged documents. As we talked about before, most forgeries are easy to spot. If you think something could be forged, give us your 2 cents. It's a partnership, and we welcome your assistance. And by helping protect EPI, you're helping protect your profits. Um, One last thing about forged documents I have neglected to say throughout this entire underwriting portion is that EBT fraud is running rampant in the industry. While it doesn't ride on the credit rails, it still presents itself as a credit risk to electronic payments. It is our job to ensure that any account that is set up with an FNS number, or, SNAP benefits, or what have you, that we receive some kind of documentation showing that the merchant is indeed registered with the government. We have a website that we can cross-reference with that is a government-based website um, that is updated on the regular within a week. Usually within 3 to 5 days, it's updated every 3 to 5 days, and we have declined many accounts because they are for suspected EBT fraud. So I just want you to keep that in mind. That is something that's important. So if you submit a convenience store or a small market or something of the sort, and they need SNAP benefits added to it, and this goes for Sigma and for Fiserv, please submit over the EBT or the document from SNAP giving them the approval. Fraud statistics. Everyone loves this slide. So many big numbers. So each year, billions of dollars are lost as a result of fraudulent transactions at various merchant locations. As you can imagine, it's out of control, and we experience a very small part of it. There were over 62 million Americans who reported fraudulent charges in 2024, costing the consumer over 6.2 billion with a B dollars. ID theft has nearly doubled since 2019, when there were 650,000 reported cases to over 1.1 million last year. The FTC releases annual reports and quarterly statistics, and it found that credit card fraud reports increased from 2023 to 2024. There were 449,000 credit card fraud complaints in 2024, and that's up about 8% from 416,000 in 2023. So just under $40 billion in fraud in 2024, with 73% of it being submitted from CNP transactions. So that's calls back to CNP merchants, why it's high risk. With the adoption of chip technology, was almost 10 years now, maybe later than that. With the adoption of chip technology, we have seen a lot of true counterfeit fraud, synthetic fraud, um, go by the wayside because they're having a very difficult time counterfeiting the chip. Um, but the keyed fraud still happens. It still happens face to face when there's a decline and the customer says, "Oh, my chip doesn't work," and the merchant says, "Oh, okay, no problem. I'll key it in," and then that is where the risk is that keyed transaction is now an at-risk sale. So what are we going to cover during the risk portion? So we're going to talk about what risk is, how risk is calculated, the types of risk, the types of fraud, and how we mitigate risk, which nobody really likes, but we have to talk about it. So first and foremost, what is risk? It's an estimation or an actual financial harm a merchant business can do to the merchant provider. That's us. EPI is offering a line of credit, essentially. All merchants provide products or services that have an assumed quality assurance. That means the merchant will deliver a product on time, accept returns for the product, and guarantee the quality of the product. If the merchant does not deliver the product on time or at all, does not accept returns, or produces a below average product, customers will not be satisfied, which results in refunds or worse, chargebacks. It's all about customer perception. If the customers feel like they were overpromised on products or services and feel undersold, they complain. And the banks are the ones that listen to them because the banks, they are the customers of the bank. If the merchant cannot pay for their refunds or the chargebacks, the merchant provider, us, we're on the hook. So what drives all this risk? So longevity, um, longevity is definitely a factor in risk. So our newer businesses increase risk because they don't have the track record. The longevity of a business speaks to its success and customer satisfaction, and a new business just doesn't have it, doesn't have that track record yet. Stability, a financially unstable business may indicate that at any point in time, it may not be able to support the risk. This can be evidenced in financials or bank statements. Sometimes we'll see net incomes decrease significantly. We'll see more write-offs. We'll see an increase in, say, customer deposits if they're choosing to put that on their financials. Um, Also, low banking with many negative balances. Um, all this stuff, it makes us concerned when we bring on a merchant that has some kind of an extended delivery time frame, such as, Windows or uh, uh, cabinet maker or any of the sort. Certain industries pose more risk than others due to delivery time frame and the ability to attract fraudsters. As discussed before, contractors of any sort create the most ID theft situations on our books. And merchants that get victimized are usually done so over the phone, but sometimes a third party is in person, making it seem more legitimate. We've seen fraud with auto repair shops, meat sellers, we just had one recently for garage door motors that reached into the six figures. It's some of it gets pretty high on the list, and the merchants don't know what they're looking for. They just don't know. So part of our job, mine and yours, is to educate these merchants. They trust you. You're the partner. You're their expert. You're their credit card expert. That's what they pay you for. Um, so part of your spiel should always be something to do with some kind of fraud, how to spot fraud um, advice. So that way they're kind of aware. As always, card present is inherently safer than card not present. Restaurants are generally the safest in terms of credit risk, as people will only pay if they're satisfied. The customer has control. Customers are paying and leaving a retail store with a product. Chip and signature will reduce chargeback liability and allow that merchant to respond to a chargeback if one does occur. E-commerce customers rely on third parties to source the product and ship it, which will take multiple days. Drop shipping is considered higher risk because the merchant doesn't have control over inventory along with the future delivery aspect of it. And again, fraud happens at these websites all the time. So I would recommend, if a merchant's gateway allows for it, to implement some kind of like a 3DS, a Visa 3DS program where the customer is being basically vetted and approved by Visa prior to the transaction happening. And Visa is the one that owns the technology. It's for all card types. Service-related industries such as travel agents, contractors, web design, etc., they all have varying timeframes, but most of them require a deposit with an extended delivery time frame, and that extended delivery time frame is where our risk lies when it comes to credit risk and real life businesses. That that extended delivery time frame is the amount of time from which the transaction happens to when the product or the service is rendered, and when if a product is not delivered, or if the service is not rendered, or if the business goes out of business, all of that is taken into account when there's an extended delivery time frame. So 1 week, not extended, not overly a concern. 10 to 12 weeks, big concern, because now we're talking 2 months down the road, 3 months down the road. Nobody can predict the future, especially these days. Um, Processing history, if previous account was in good standing with us, it's likely the new account will be as well. If there's a previous processing at another acquirer, send that over, always helps us. If there's a collections balance on our previous account, then we always need to clear that up prior to moving forward with the new account. Occasionally, we will allow the new account to process to satisfy that old collections balance. The credit score, like I said before, shows us an overall picture of the principal's financial character. Do they make payments on time? Are they in collections? Do they have established credit? Is there an ID alert? How many recent inquiries? All of these answers to these questions affect our judgment on whether or not the merchant can support the risk. And the billing method, if the merchant has recurring billing, they need to be mindful to turn it off when a customer cancels. Otherwise, chargebacks do come in. Types of risk. So there are two types of risk, or two subsets of risk. There's actual versus potential. Actual risk is real dollars and cents that we can label as our risk that's been processed through the merchant account. So for example, we have a business that went out of business, that and any chargebacks coming in, that is our actual risk when the merchant's not paying for it. We have a merchant that has been taken for $100,000, and we know, $20,000 has come in already, but we know that there's going to be another $80,000. That's our actual risk. Our potential risk is more for what I said earlier about business failures. It's only realized if a business failure occurs with an extended delivery time frame. Transactions could be disputed because of non-delivery of products or services. End of month fees are also taken into account. Though I try and separate risk from end of month fees, if it comes to be where the chargebacks are creating such a large amount, those get tacked on to my efforts to collect initially, and then if I'm not successful, then it goes to our recovery department. So fraud risk involves accounts opened with a stolen identity where a legitimate merchant is victimized, or collusion scenarios. It could be that merchants, excuse me, we've come across many business ID theft situations this year, and again, they are always internet leads. Stay away from the internet unless you're doing the work to vet that customer, or this is something that you guys normally do. If you don't normally accept internet leads, please don't accept them and give us the first go around with them. Give that one to WorldPay. There's credit risk. Again, furniture store with a 30-day delivery time frame, processing about $100,000 per month. It carries a risk of $100,000. The risk is mitigated using our findings from reviewing the merchant's credit score, statements, longevity, and stability. If you know the delivery timeframe in underwriting, please share with us in an email, or make sure to fill out the section appropriately on page 2. A lot of times our merchants are looking to increase their high ticket when it comes to risk management, because maybe the high ticket, it's not correct on the initial application because the merchant wasn't honest or wasn't accurate. And underwriting said, okay, well, let's set this for a $4,000 high ticket instead of a $10,000 high ticket. And it hits risk because now they're putting through $8,000 sales, $9,000 sales. So our job then in the risk world is to reevaluate the merchant and to make sure if they're supportive of an increase in a high ticket, excuse me. And how we do that is we request bank statements. We always ask for the last 3 months of business bank statements, summary pages, bank statements as a whole is a pretty invasive request. So we always ask for the summary pages just to see what they have in the account, beginning and ending balances every single month, so we know like what they keep in the account, generally speaking. That helps us decide if the merchant is qualified for a high ticket. So now let's talk about fraud. Fraud comes in all shapes and sizes, and the following are some of the more common types that we see. Again, common victims of ID theft. They include doctors, dentists, retail businesses, and other professions where a lot of information is public. Merchant fraud, where everything seemingly verifies new business and account opened with the sole intent to commit fraud. This doesn't typically happen with us where we get a deal that is fraud, like everything is 100% fabricated and we don't catch it. I can tell you this has happened maybe 3 times in my time here where it's been approved on our end and we've captured it pretty quick after, but it's very rare that we see true merchant fraud. It's usually ID theft. Um, Collusion and bust out, and we have that mean what that means is I have a merchant account and you have a couple of cards using stolen identities, and you want to run those cards through my machine for cash advances, no problem. This is coupled with bust out fraud where the cardholders will send a quote unquote payment and the issuer will raise the limit until that payment is processed. And then it's found to be bogus. And now the card is over that limit, busting out of the credit limit. And the customer disappears and the merchant is now left holding the bag if the customer's not upholding their end of the bargain. It's a really tough fraud to spot. We don't see a lot of it. At least I don't think we see a lot of it. I'm not seeing a lot of it. So either it's really tough and really hidden on the portfolio, or it's not happening, at all on my portfolio. There's refund fraud. We have, quite simply put, this is refunds that are issued without the intent to pay. We usually capture this because we have our merchants set up on PTS for the Fiserv portfolio, and we have something very similar on the Sigma portfolio. Any credit without offsetting sales, everything gets held up. As you know, on the Fiserv portfolio, even if there is an offsetting sale, gets held up, delayed a day. It is what it is. That's how we have the system set up. Um, we have seen an increase in refund fraud where a stolen card is charged by an unwitting merchant. And then that same customer calls in later that day, the next day, or 3 days down the road, and they ask for a refund to a different card. Essentially, what's happening is the customer is the fraudster, and they are moving money from card one, which is a valid stolen card that is either mine or yours, and they are moving the money to a prepaid or reloadable Visa MasterCard where they can then access those funds. So we have seen that a lot more in the last 6 months. We've captured most of it. It's very frustrating when it does happen for the merchants. Um, we've counterfeit fraud. This is where you guys need to educate your merchants. The merchant is usually not involved. Card accounts are opened using stolen information, um, characterized by poor authorizations and sales done on multiple cards sharing the same issuers. Um, Declines are bad. If a merchant gets a decline on a chip red sale, please express to them to not accept the transaction in a keyed sense. Let it go to a fallback transaction where they then have to swipe the card and use the mag stripe. Chances are, if you're getting declines on the chip and the chip looks fine from the outset and there's been no issues with the terminal all day or all week or what have you, the terminal is not the problem. The chip is the problem, and the card itself could be the problem. All the numbers could the it could be a stolen credit card. Something I want the merchants to be acutely aware of is that this happens. It happens regularly. So if a merchant is being presented with more than one credit card to pay for a product or service, um, over the phone or in person, but you can't process anything with a chip, don't accept it. If the customer shows up with a piece of paper written out with card numbers and expiration date and CVV, don't process it. If the guy has to, if it's on the phone, because now we're seeing a lot on the phone. Oh, well, the NFC isn't working. So now the merchant feels like they have to process it by looking at it on the phone. Maybe it's a picture of a card on the phone. Don't let them do it. The card needs to be in their person to process it if it's an in-person transaction. If they have any concerns or any questions, please, please contact risk@electronicpayments.com. We will help them through this. Um, like I said earlier, in regards to merchant accounts and deals, same rings true for merchants. Sometimes it's better to walk away from a sale. Um, Oftentimes it is too good to be true, and the merchants are really excited to get this payment because they're going to make their month. They have to look past that and they have to understand that it's going to hurt their business tremendously if they accept this payment. And we're seeing this less, but sometimes merchants are asked to overcharge cards and then wire funds to a third-party shipper. Again, not something we see often a lot anymore, but it does happen. The merchant should never be wiring to a third-party shipper. If something needs to get shipped, they need to set up the shipping. They need to set up the shipping. Um, sorry, that they need to set up the shipper. They should not be allowing the merchant to set up the shipper. So red flags for merchants, please share this with them. You can take screenshots of this. Please email blast this out to to all of your customers. I've been talking a lot today. This is a lot more than I usually talk in these webinars. I'm usually not in love with giving webinars because it's such a topic is so dry and never really changes, but that's because the fraud doesn't really change that much. Fraud is bad and it's here forever with us. So um, these are the red flags. Over the phone transaction, when business normally only accepts in-person transactions, this should be easy to spot for merchants, but a lot of times there is a story that makes the merchant feel really comfortable. And next thing you know, there's a truck to pick up 100 tires or 20 bales of hay or 10 garage door motors. And in 30 days, chargebacks start rolling in. Every industry can be affected. It goes all over the place, from supermarkets to tire stores. It's crazy how brazen these fraudsters have gotten. The sale is too good to be true. It sticks out like a sore thumb, but generally the merchant believes they are making their month or their year with this one single transaction. And oftentimes it's bogus and leads to a loss for the merchant and sometimes EPI. Money is green and all the merchants love a big sale, but sometimes it's better to walk away. Again, when the chip is not working, and in this scenario, the card looks real, may even feel real, but the chip is fake. This is a counterfeit card with a fake chip. It doesn't work in the terminal and forces the merchant to key the sale in. And we see this a lot in the liquor store space, but it has blossomed into other retail shops as well. More than one card is being presented. And this happens when the merchant receives one card and a decline happens, and then the customer produces another card, sometimes with different AVS information. And maybe that declines, and then they produce another one, and it's like they have like a deck of cards full of credit cards. um, and sometimes merchants are instructed to process certain amounts on different cards because the fraudster understands that, hey, the authorization limit on this one is 3,000. So I'm going to tell them to put through 2,500 on this one, 1,500 on this one, 1,000 on this one. All those could be fraud. The billing and shipping addresses are different. At this point, it's a classic example. It's easy to spot this fraud. Merchants should always ship to the billing address. Occasionally, those addresses will be different, but a lot of times it's a larger company making those purchases, properly vetted, things of that nature. And then lastly, the customer insists on setting up delivery. This is another example of clear-cut fraud. It's very easy to spot. The merchant should never wire funds to a third-party shipping company. They should always set up their own delivery. If the customer is picking up the item, demand to see the card being used and rerun it as a chip transaction if possible. This will reduce fraud. And it's not on the slide, but I recommend that if a merchant has a new customer coming in, they accept wire transfers or checks in the beginning to cut down on credit card fraud. As the relationship grows with a new customer, then they can accept transactions over the phone or being presented to them as a key transaction just because they know, okay, this is a proper customer. Okay, we're going to talk a little bit about phishing. We all know the normal run-of-the-mill emails. On average, 3.5 billion of those emails are sent every day. Some phishing attempts are a little harder to identify as bad actors are getting smarter. There's a whole bunch of these kinds of phishing things, but one of them is spear phishing. The emails are sent to a specific person, has a very specific details, and may request some kind of bill payment or bank transfer. It's a common scam. Um, less common, or I'm sorry, whaling is less common with small businesses, but it's still a concern. Normally, this is coming from a CEO, and it preys on employees' willingness to follow directions. Usually, this will include a request to transfer money. Um, Smishing and vishing, it's all the same, but using phone calls and text messages. I myself have been overdoing my Easy Pass payments for, I mean, years now. I refuse to pay them. They are animals. And then there's fishing, where there's bad actors will prey on people's reliance of social media, and they may mimic an account to extract information. So how do we mitigate this risk? Well, um, across the entire landscape here. So there's risk on every single account that comes through our doors. From the small restaurant to the travel agency, everyone has risk. The big trends we've been seeing is where fraudsters are posing as car owners or fleet managers, getting the cars repaired, using stolen cards to pay for services over the phone and sending a third party to pick them up. I mean, that's just one example of all sorts of different frauds, and we've seen it all. Risk mitigation starts in underwriting, and as stated before, the information we find out about an account or principal helps mitigate the potential risk we may encounter. It continues after the account begins processing. The merchant needs to be involved. They need to be on the lookout for suspicious customers. They also need to be very wary of customers willing to overpay for product or asking to wire funds to a third-party shipping company. I can't stress this enough, but authorizations. Multiple declined sales from the same customer usually equals fraud, especially if they're using different cards and keying the sales. It's almost a slam dunk when the quote unquote chip doesn't work, or they need to make a phone call during the transaction to speak to their boss. We may ask for an invoice to validate a large sale or something that seems off. We do this to not only protect ourselves, but also the merchant. And if the merchant wants to raise their average ticket or high ticket, we may want to obtain bank statements to confirm the merchant's financial stability. We have other internal controls that we utilize to identify questionable or higher risk merchants. And finally, people don't like this, but reserves and shutdowns, we may feel it necessary during a review to take a reserve on a merchant's account. Um, Reserves don't happen that often, but they do happen. They are necessary. They're taken one of three ways: by holding back all of their batches, or we place a debit on the bank account, or we set a merchant on a rolling reserve that involves a percentage of their batches being held to build that reserve. Reserves are held to offset ongoing risk the merchant may not be able to support. If an account has a reserve and we close it, we could hold the funds from 3 months to a year. All right, let's wrap it up. So fraud and risk mitigation starts in underwriting. An ounce of prevention is worth a pound in cure. If we can prevent fraud before it starts, everyone wins. Know what's needed prior to submission. Refer to this deck, the underwriting guidelines, email underwriting with an inquiry, or email me directly. Do my best to get back to you within a couple of hours. Sometimes it does take a day for me to get back because I have become inundated, probably because I always tell people to email me. Um, Risk comes in all forms and may never be realized. From the mom and pop convenience store to online furniture stores, risk varies and losses could come from anywhere. Uh, Know your customer. You know your customer. Merchants need to know their customer. Can't be stressed enough. It undoubtedly helps in avoiding fraud merchant accounts and fraud sales. It makes it easier for you to obtain documentation as well. Plus, if you know your customer and have a good relationship with them, it makes them a bit more sticky. We will need to mitigate risk by holding reserves at times, but we do everything else before we gather a reserve. We will do our best to lessen that impact on the merchant, but the main focus is to receive payment on any outstanding debts and prevent any future losses on the merchant account. And lastly, we're all on the same team with the same goal. We want to prevent financial harm to the merchants and to EPI, and we all want to make money. And sometimes we cannot sacrifice um, our goal to prevent losses with the goal to make money. Sometimes it doesn't jive. Um, and I'm here to do both and separate both. And sometimes I'm blunt and I'm upfront, I'm honest with everyone that asks me questions. I don't, I don't pull the wool over anybody's eyes. I am about mitigating risk over profits always and forever, as that is how it should be, because I'm the risk guy, as is my team. So if a $20,000 sale on this merchant that's not making you any money, it's great for you, it's great for the merchant, great for everybody except for electronic payments when that sale gets charged back because it's fraud or because something doesn't get delivered or what have you. Um, Sometimes we just have to say no, things like that. So for any general underwriting or risk needs, you can email underwriting at electronic payments or risk at electronic payments. And if you need to, you can email me directly. You can call me, though calling me is a little difficult because I'm usually inundated on my computer and calling takes me out of that focus and I can't give you the attention I need to be able to on the phone. You can text me on that number, or you can email me directly. And that's it. I hope this was informational, educational for everybody. And, if you have any questions,
Yes,
let me
we
know.
have some questions.
Oh,
Yes.
good.
We do have one that's come in, and please, everyone, feel free to pop it in the chat or in the Q&A box, and we'll be happy to address it, especially while you have James' valuable time right now. The question that's come in is, for my clients who have reoccurring billing, I urge them to get their customers to sign an authorized to bill credit card form. Is there a specific language that I should use or must be used? And then there's a follow-up question. I'll add to that after you answer the first part.
Okay, so when it comes to automatic billing, it would be best to have the customers reauthorize every month or every 2 months or every 3 months to make sure that they want to continue with the automatic billing. As far as language is concerned and authorized to bill, it helps, but issuing banks, if there's a chargeback of some sort, issuing banks may not see it that way because a lot of times the customer is right in their eyes and their customer is the cardholder. So they may still not allow it. And as far as I know, there's no specific language on any of these credit card auth forms or right to authorize my card or anything of the sort, unless it's notarized and approved by lawyers and things like that. There's nothing beyond that really protects a keyed sale from getting charged back, especially if the customer calls and cancels or asks or requests to cancel the month-to-month billing and it doesn't get canceled, that chargeback can still happen without an issue. But simply put, it's really is up to the banks and how they view it. Um, there is no there is no one magic word or one paragraph that I can tell you, yeah, add this because this will prevent chargebacks. There's I don't have that, unfortunately, because I don't think it exists.
Thank you, James. Yeah, and then the follow-up question was, you kind of touched on that as well. Can Risk review the form, and does EPI have a form or template? So I'll let you expand on that again briefly.
I mean, we can review the form, of course, but it'll be the same answer. It's like, oh, this sounds really good, but it doesn't 100% prevent a chargeback or anything of the sort. Um, I I can tell you that, well, I just lost my train of thought. So we can review the form. It won't. We can tell you, yeah, it looks good, but it won't prevent the chargeback from happening. Um, oh boy, my age is catching up to me. This is terrible, Bree. Is
Busy
this what
man.
happens? Is this
I
what happens?
understand. It is. I know.
Brain is
18
turning
years
into
with
Swiss cheese.
EPI.
I had something. It was gonna be good, I promise.
That's okay. It'll come to you. We're almost at the top of the hour. So flip to the next slide for me. And if anybody else has a question, feel free to pop it in. We can address it. Oh, we just got one. Sorry.
I
So
was gonna
in lieu,
I was gonna
yep,
say, I see Craig's question here. So, in lieu of a reserve, would you consider a cross-corporate guarantee or a cross default for a newer operation with a strong corporate parent? Craig, to answer your question, yes. We don't approve accounts with reserves. That's just not how we roll here. I like to consider ourselves a boutique processor, so we're not the Fiservs or the WorldPays of the world where we have these massive accounting uh, teams that can keep track of that stuff. Um, we we prefer not to approve accounts with reserves. So a cross corporate guarantee that helps for a newer merchant or a merchant that might be smaller and they want to take some larger sales. We've done that in the past.
beautiful. Thank you, James.
And now you want the next slide, right? Are there any other questions?
He said a follow-up to that, would you step down on the guarantee, I think is what he's typing.
Um, Craig, I apologize if you could explain a little bit more based on performance,
There we
step
go.
down. So if we would reduce, so no, because that guarantee, if once that guarantee's in place, the guarantee's in place until there is a document that is formally removing it. Now, of course, if there is an issue with the guarantee and the customer, the corporation no longer wants to guarantee the business, then naturally we'd say, why? Is there a problem with the business that they don't want to guarantee it anymore? Um, but a lot of times we will ask for banking or something of the sort if there is going to be some kind of a change like that in the structure or the guarantee or something of the sort.
Thank you, James. Okay, so that takes us to the top of the hour. Thank you everyone again for your time. Just a reminder, impact registration is open and filling up quickly. So get out there
Ooh,
and register,
ooh,
impactepi.com. Go ahead.
Bree, can I say it? Can I
Yes,
say it? Guys,
you
guess
can
who's
say
joining
it.
us for Impact? Guess what? It's ludicrous. So as a somebody who was born in the 80s, I grew up in high school with Ludacris, and I can't be any more excited. All right. So I hope you're all excited for it.
Yes, please register as soon as you can because we're excited to announce our entertainment. And then we also have quite a few opportunities upcoming as far as webinars. We've got our monthly roundtable, which will be on July 31st. And then after that, we've got our quarterly Clover training on August 13th. And then Pro Charge will come up on Wednesday, August 27th. So many more opportunities for you to join us, learn, gain knowledge, and we appreciate you joining us today. James, thank you for a wonderful presentation. And again, everyone, thank you for joining us today. Have a great
Thank you.
afternoon.